Hey everybody, what's up? It's Booksy. Today is Monday, November 20th, which begins the Thanksgiving holiday week. It's a short week this week, day off on, I believe, Thursday, and then a half day on Friday. So really looking at 3.5 day market week, which is very short. Volume has, been predictably pretty low today, at least for AMC. And I think that what we're experiencing right now is probably going to cause a little bit of concern and confusion going into the week. I can see one of two things happening, which is kind of typical, right? Up or down. It's not very complicated. What we've got here this morning is essentially like we got the breakdown. It's a bearish action, so it came up high above the range again and then dropped really low. And you can see I'm on the 1 hour, and on the 1 hour we closed kind of right on that trend that we had built up last week for about the whole week, or excuse me, not the whole week, but most of the day on Friday. If you zoom out, you can kind of tell that this is a really similar breakdown to what we experienced on the previous, I'll say, iteration, like the step down. This basically became a distributive range by having an upthrust that then dropped back down through the uptrend that was created. And you see a little bit of a sort of a head and shoulder vibe to it. But this is basically a bear flag, LSPY, which is the last point of supply, before a move to the lower part. You can see the deliberate action here is just to drop it beneath the range. And back here, this was on Wednesday the 15th. This drop was targeting that 761 level, which we still have yet to come back up and check. And that's been my main confirmation level because it's sort of like a return to the other side. It would indicate to me that this is a bottom if we could get above this and find support. Everything is really wound up. If you look at 2 hours down, you'll see that we made basically an RSI double bottom. It is slightly divergent still. This to me would indicate that if we can find some support here, we definitely will see a pretty explosive move. I think you have a decent chance of seeing at least a run, in my opinion, up to the 850s. I've got some targets that range between 860, which is this clear, obvious target for this gap at the 860 mark, and then another one up here at like 920 right here, which is the top. I'm not seeing a lot of great targets that would indicate that you'd come all the way up near 10, which is the full gap fill. I don't think that would be accomplished right now, at least not without some other kind of like setup for that. Right now, all I'm doing is measuring the downward wedge, and I'm using the two different measure rules that you can do with that. So it's a bit of a range between the gap fill at 860 and then the top, or I should say the bottom of the next gap, which is around like the 930s. So that's about as far as I think we would go on an initial push here. I do think it would be like an auto reaction, and then I think we'd form a bit of a range. We've been needing to trade between 850 and 9. That's the target region. So this setup is really good for it. The reason why it's kind of like a flip-flop week is because on a holiday week, you really don't know if it's going to be just kind of dead in the water, or if there's going to be, let's take advantage of the low volume and drive down for a price, or let's take advantage of the low volume and drive up to a price. You're really just kind of predicting what you would normally be predicting anyways. So, but you're doing it with this kind of expectation that the market may move on lesser volume than normal, because a lot of people are on vacation and not participating, which does typically happen. Like the week of Thanksgiving or the week before Christmas or around Christmas, you do see typically like lower volume. So we're going to kind of ignore that and just sort of look at the overall picture here. And I think the overall picture is really bullish. But based on this setup, as you can tell, we've already kind of accomplished what I would call like that hooking action here. We can do a Fibonacci retracement, and I mentioned on the Discord group this morning that if you look at the 15-minute, it's pretty clear that there was a mild reversal pattern. This is a doji that usually indicates, it's a gravestone right here, that usually indicates a bearish reversal because it's a higher volume doji and it obviously ends low. It starts low and ends low. But if it's on a bottom, sometimes it can indicate either a short-term trend reversal or full trend reversal. we did get a short-term trend reversal. The next candle beside it closed above it by a couple cents. Not surprisingly, what's really going on here is it's bouncing between the 0.5 and the 382. And then I looked at this morning a pretty critical spot at 743, and I've been talking to the group again about how I think that 743 is kind of my marker right now, and it's very close to the 742, which is the 382, and you can see why. I mean, if you look right here, this is where it found support Friday, and then we got the pop, and so that's where I've been looking all day, and we got that early chop right around there, first 15 minutes of the day, you know, and then we rejected from it. And you can see it's been working its way lower and lower and lower until we finally got kind of a double top here, rejection, which is when we finally pushed beneath what I would call like this sort of bearish flag pattern going up. I'm hesitant to call it that because I'm not 100% sure we don't see a change of character here, but it's hard to predict something like a change of character because it literally is saying that the market's going to do something that it doesn't currently set up. It's not currently set up to do. Like right now, it looks like it's set up to be that same kind of LPSY that we just looked at a minute ago, where you're basically just creating a bear flag and then you're going to start dropping again. I don't think that's unreasonable. And if it did do that, the question would be like, well, where would it go, right? It's pretty straightforward. I think you would probably come down and try to achieve new lows again. They may not get there, but that would be the goal, would be to get it beneath 726. Now you might say at that point, well, why not just go ahead and go for the quote unquote spring action beneath 705? Well, 705 is, I know it sounds kind of silly to say this, 705 is not right beneath 726, right? There's still like a lot of trading that could happen here within this wedge structure. And it could take quite a while, you know, and really, if you look at the structure itself, there's no definite end to it until much later. I mean, really like the end of the week, maybe you could get down here to that 705 area. But just dropping beneath here doesn't guarantee that you're going to get that spring. So I'm kind of watching it because I think that on lower time frames, there is sort of like a bearish sentiment on some of the lowest time. I'm on 6 minute right now, and you can see the RSI is kind of turned back down. It looks like it's about to break down, but you get up to like 30 minutes to an hour, and there is this kind of trap in the middle. Again, it's this idea that we're kind of chilling out like right around the 50% mark on most of these mid to low time frames. I'm not seeing like as strong of a case though for a downturn. In this particular instance, you can actually see it's quite divergent, these two bottoms. The price action is dropping pretty rapidly here. You made two consecutive bottoms with, you know, lower pricing, but with higher RSI. It does seem to me to be a bit of a divergent bottom. And when you get to like the 1 hour, it's a little bit more like a double bottom, but it is divergence. So again, it looks a little bit more like bullish divergence. Now, could you see this come back down? Could I see it coming back down, you know, to the 30 mark or something like that? Yeah, so I do think downturn here, there's room for it. It's not unheard of. And the idea of dropping down to like the 720s, for example, again, it's not like super unusual. The idea of coming down to 733 and trying to find support there could also be part of this, because that was the support previously, or what is now, you know, 730, the low. I mean, you could see either of those provide a bit of support. So locally, I think that if it drops beneath 736, which is basically the 618 here, it's also like a key level that we have in our range. I think you're likely going to see, if it drops beneath 736 today or tomorrow, that it's going to come low. You should see 730s and then probably beneath that. I still think it's a bit of a bear trap unless they're going to use the low volume this week to kind of like ease it down into the 70 whatever level and get their spring right now. It's totally possible. But I mean, there's just so much built up here on like higher time frames that, like I said, up to 2 hours, that to me, it looks like it's ready to go. And I think as soon as it makes that bullish break, you're likely going to see some pretty strong bullish reaction. Usually this would be like our auto reaction, and it's typically very strong. you know. So even here, you look back and you can see the volume kind of dying off on the way down. This is looking back in like September. And it gets to the last one, it looks like it's going to do it again, and it just doesn't quite come down as far. It sort of stops short and immediately reverses. And then you can see like the dying volume was coupled with this double bottom on RSI that was divergent. And right now, I think we're doing something kind of similar. We're not as low as we were. I'm on the 2 hour right now. But again, volume has been dropping during this downtrend. And yeah, could be an S curve, you know, with continuation. That's always possible, you know, based on where we are. It's not out of the question, but it's also really strong. There's a really strong possibility here that we see, even on a dip, that it could be very fast and there could be a strong reaction to it back to the upside. I don't think it's going to look identical to this. I just think that the setup is very similar. So when I look at 4 hours up to daily, this is where, again, you get a little bit more of a bearish perspective on everything. There seems to be a little bit more room. You know, you could definitely see it coming down more. We do have a falling wedge, but again, you know, one could argue this is like an S curve and it has to finish with a drop. I could also see it kind of breaking out, coming up high and doing that particular kind of action we talked about before, where we really come up and we sort of finish off by meeting these two trends, you know, where they intersect. And right now, this looks to me to be around this Friday. So I'm still like of the opinion, even if we see downside today, I'm still of the opinion that we're really close to the bottom. And I think we're going to see a strong reaction by Monday, for sure, in my opinion, that we would come up. And again, I think those targets pretty clear, you know, upper gap to be on, so 860 to be on. And that's pretty much all I got for today. I mean, when you're looking at breakouts, we're just not there yet. Again, the price action has been predominantly bearish today. We've had two pretty big sell downs today. Breakdown in the beginning of the day with this UT, and then it broke down, came low. We've got a little bit more of a bear flag. Volume is suspect. It's a little higher than a bear flag should be, but it's there, you know, and you have a secondary breakdown again. So once again, we're kind of retesting this 736 level. We did check this lower creek, so that's something that I'm not really concerned about. I just messed up my chart. If you look at the top from Friday, and you look at the creek that was tested here, I think it's checked. You know, we came right down at that intersection, right at 736, and we checked that creek. I'm not looking for it to necessarily go back down to that again, although that will be, you know, a possible trend that I could catch later. So if you wanted to have that on your chart, you'd have it. We got the 786 at 731. We've got the 8 at 730. So those are also right around that 730 mark, which is, you know, what we expect. There's a lot of intersections here. There's a lot of lines here you can see from different trends. So right now it looks a little bit like seller dominance, that we've got sellers that are just kind of pumping it, you know, up to sell off again, kind of doing continuous distributions here. I think if we can get above these outer trends, and this blue one and this pink one that you see, I know there's like three here, they're all at this point kind of intersecting down here on Tuesday around 722. It could be that we don't see a breakout till closer to there where it kind of crosses all of them at once. So maybe we will have, you know, that low time period here for a day or so, and then a reversal. But as soon as it gets above either of these two trends, the blue or the pink here, I think you're going to start seeing it come back above the tops. And at that point, I'm really looking for that confirmation, 750 to 760. They've definitely carved out a spot here for it. You can see like right around, by they I mean institutional traders who are not trading this area right now, have left it pretty open. So that would be where I would expect to see a bit of a, yeah, you could call it like an SOS type phase. So could this have been an SOS this morning with a backup? Maybe. But I think that based on what we saw last week, you've got 1, 2, 3 different tests along the top here, which was 748. This morning it gapped up above there drove the price back down. I mean, it is what it is. Like, that particular action is distributive. If it applies to the whole range, it will come down and make a new low. If you have a change of character before then you might see it come back up. And I do think that a change of character in this case would be breaking out of these three downtrends, these three creeks now, and then pushing back up. And if you don't know where those come from, you can see, I'll zoom out like a little bit. They come from the tops, so pretty straightforward. You shouldn't have problems drawing them yourself if you want to draw them. The outermost points, I'm using like to the wicks here to the top when we first had our reaction after we came down right here. And then same deal with the pink, goes from upper highs, right? So we're getting really close. I think we're really like pushing along. So the fact that we're getting this compression, the fact that the RSI looks primed to go on, 1 hour and 30 minutes, 2 hour even, and then, all we really need to see is that breakout. I think as soon as we see that breakout, we really are going to see something pretty big here. If we don't see buyers step in this week, if we don't see any kind of a break of these particular trends, the tune has to change. So if that's the case, I'll do an update about that. S-curve down is very low. It's like in the mid sixes or something. So full-on breakdown here would be pretty catastrophic in terms of direction. But I don't think we're there just yet, and I don't think that it's really like we're closer to the break to the upside than we are to the downside, right? So if we came down here over the next day and a half, and Tuesday we're sitting beneath at somewhere between like 718 and 726, and we're going sideways, yeah, like we need to talk about potential downside. What were those targets? And yeah, I think again they're pretty low. You can see on the fibs it's like 660, but I think the S curve from the tippy top could go pretty low. And I know that I've done this before, so I don't want to like waste a whole lot of time on it, but it looks about like the same. Roughly, I think the midpoint would be here, roughly 670s, 660s. So about the same, in terms of a drop here. And if that were to happen, again, I still think there'd be a decent chance of a really strong reaction just based on where we are on those upper time frames. So looking at the S&P, I've got highs here roughly around where that widening starts at the 756 level. There's another possible top at, 756. I meant 456. It's another possible top at 453. It's like 453.30. That's kind of where we are right now. So if we were maybe within the next like 50 cents, if we were to reject here, it wouldn't surprise me. I would be thinking that we would need to come back down. Again, if you go up to the daily, we're just starting to get into overbought territory. There's no evidence of the S&P having no reaction at all to being overbought. It's always had a reaction to being overbought on the daily. Now on the 4 hour, sometimes it will go really, really far and be quite extended. On the daily, anytime you get into that overbought territory, usually within a couple of days, as soon as it becomes overbought, you maybe have 2 or 3 days where it could be overbought. You almost always see some kind of a reaction, even if it's kind of mild, right? And you might get an extension or something like that afterwards on divergent RSI, which is the case here. I think on the whole, though, that price target being met up here in the high, and then knowing that this is really close to the outermost creek from the previous top, right, way over here all the way, which is, back in January of 2022 to July of 2023. I think it's likely that you see that particular area at this particular time be a decent reaction back down. My expectation is that we're going to come check this guy. This creek starts August 16th all the way up through October 18th roughly. We've got a lot of gaps below, but I think that's kind of the first big stop. And so I would be looking at 446 and then probably 442. And the intersection there is on December 6th. So I think that's a likely candidate for when it maybe gets there. It's very fast, but this is also a very steep trend, and a lot of times the reaction's equally as steep as we see with the S&P. So it would not surprise me at all if we kind of hit that reaction and really nosedived, over the next few days or over the next week or so. And just to cool off RSI, I don't necessarily think that it means that it's going to go down forever. I think it's this idea that we haven't really tested very many supports here. And so I wouldn't be surprised to go ahead and see that if we went ahead and saw that retest and then perhaps go up again, But that's kind of where I'm at right now on the market on the whole. So I think that's all I got for you today. There's not really much else to say. I'm just watching 736 below and then 743 above. That's kind of up and low breakdowns. This definitely looks to me like it's getting ready to try to do its drop here, but I still think, maybe a change of character happens. We see this reversal happen today or tomorrow. And if not, I do expect it to come down, so sub 730. So I think that's pretty much all we could say about it. And I'll give you an update as the week goes on, as I'm able to with the holiday. But that's all I got for you right now. Hope you have a good one. Talk to you later.